Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders, and we've got Keith Harwood here. Keith, great to have you with us.
Thank you.
A lot going on, some big headlines today, but we're not sure exactly how that's going to play out for us. So great to have you here to kind of navigate us through and get beneath the surface a little bit. I know you're great at finding these trades that get hidden in all the noise.
Yeah,
And that's what I'm looking for today is to just get past this noise, look at the market, and let the charts tell us what's going on. So great to have you here, man.
absolutely. Yeah, let me pull up the market here. Yeah, I mean, I think that there's a lot of stuff going on right now, a lot of conversation about, what's happening with the government shutdown. Is this going to be this catastrophic event that's going to create, market liquidation and all of this other stuff? And, at the end of the day, we go through this every few years, I feel like. Maybe the worst was whatever, I guess 7 years ago and shut down for, I think it was 35 days. It doesn't shut down the government though. And I think people need to remember that it is not a full-blown shutdown. The necessary operations continue. Some people will work, without pay, but then they get their back pay. So non-necessary elements of the government may not be in operation for a few days, a few weeks, a month, but then everything kind of just goes back to normal. So for me, like I think of this as something that's just almost like the noise as opposed to the signal. We may come to a deal tonight. It's all about this negotiation stuff. The question to me really comes back to what ends up coming from the negotiation once a deal is set, because the negotiation and the deal that needs to be set, whatever it is to get everything going smoothly again, may have something underlying it that has a shift on the economic side of things and the stock market side of things. But until that occurs, we're just looking at something that unfortunately has kind of become a normal operating process. Run it out to the last possible minute, maybe go a few days beyond it, and then strike a deal, and then back to business as usual for another year or two or whatever it is until you hit the next deadline. So
Yeah, all it's so much posturing, it's
yeah,
ridiculous. And it's just frustrating, it's just everybody get back to work, do their jobs, and let's
yeah,
things on track here. So, from our
yeah.
standpoint though, like you said, unlikely that you'll see a big impact, but you never know, right? I mean, we've seen
Right,
things
exactly. So it would
lately.
be like a tail risk scenario where if something really funky happens that I'm not expecting, and the market's not expecting. I mean, if the market was expecting this to be really drastically bad, we wouldn't have grinded higher the last 2 days heading into the
Mhm.
deadline. The pullback that started with, Powell saying that stocks look pretty heavily valued or overvalued, and the Buffett indicator showing that the market's very overvalued, and you start to get this pullback. And then as we're coming into this deadline, as opposed to continuing to the downside, we bounced off the 20-day moving average here in green. We're starting to show that sign of just the same normal process for this market. We get a run up and then you get a pullback, and then everybody buys the dip, and then we make a new high, and then we get a pullback. And then everybody buys the dip, and then we get a pullback. And then everybody buys the dip, and we make a new high. And this time it looked like, I mean, and to me, and I think many, this may be going into that full bull trend. And then, even the slightest thing seems to be able to pull the market into a dip, but it can't seem to ever get it into a falling knife liquidation, anything like what we saw in March of this year when we were dealing with tariff stuff. This is all about kind of frustrating the bull along the way. If you don't take some
Mhm.
profits, then you can't buy the dip. And if you do take profits too early, then you end up just getting back in where you sold on the dip. And so finding those ways to just continue to run the long run, but in the short term, knowing that any given day may be the start of that next 2 or 3 day dip, um, almost feels like a coin flip of when that dip may begin, other than it probably wasn't starting yesterday because we just dipped and then started going up. But now, as early as Wednesday, Thursday, Friday, maybe that's the dip. And frankly, Friday would be the day that I actually have a bigger concern about rather than this government shutdown, because we've got non-farm payrolls. And so when we get
Mhm.
that non-farm payrolls number, and depending upon how it comes out, that may have an impact on Fed policy. And that has a bigger impact right now on the market. Anything that seems to impact the potential rate cuts, the expected rate cuts, and the expected path of the Fed is certainly in major focus right now for this market. So, got to be a
Yeah,
little
well,
bit wary of that.
yeah, definitely. We'll keep a close eye on this and see how it goes, but there's got to be some trades. We see this kind of
Yeah.
I call it a shave and a haircut market. You pretty much you can hear the pattern come out, you know what's coming next.
Yeah.
And so with that though, that is based on indexes. So that's the broad market making this pattern go.
Hmm.
Within that index, there is rotation, there is
Oh, yeah.
profit taking, there is, all kinds of things moving around underneath the surface. And that is both where if you're not paying attention, you can kind of get blindsided if you think that the whole market's just kind of doing the same thing.
Oh,
That's
yeah.
dangerous. But at the same time, that's where the great trades hide. And
Exactly.
so really interested to see if anything has popped up on your radar lately.
But so one thing that, I mean, just because you just mentioned it, this whole like, where is this movement coming from? It's not coming from everything. So this chart right here is called the MMFI. It's the percentage of stocks above their 50-day moving average. Generally gives us an indication of how many stocks are participating in this rally. And when you've got a real big bull market, you tend to see this 70 plus. Right now, it's 56. That's not
Hmm.
an indicator of a generally bull market. And even when we were making new highs, we never got above 70. It's a very much stock pickers market, like a hyper focus of getting into individual names. Now, this isn't a big stock necessarily when in relation to like the Nvidias of the world, but I think most people probably caught this whole IONQ. It's quantum computing, and it was a mega chase. It went from 45 to 75 over the course of about 2 weeks. These are the kind of moves that we're seeing sometimes in this market where you've got stocks that are going crazy parabolic. You've got stocks that seem to be grinding higher, and then stocks that are just doing nothing. So
Hmm.
it's this balance of trying to find which stocks are going to go into a potential for this parabolic type move, which that's a hard one to find. That's the needle in the haystack. Which stocks are going to go into just more of a bullish trend for a bullish play, or which stocks may be more likely to consolidate and then trying to figure out the best way to leverage those. And that's the beauty of like the options market for me is when I see a stock that the setup somehow is predictable for an IONQ, if I buy an outright call, I can make huge leveraged returns, 1,000% certainly was possible in this move, amazingly, right? In those stocks that are going nowhere, I'm looking for like a put credit spread where I just collect some premium for the stock not moving. For something in between that's grinding higher, I've got to go into a call debit spread. So it's like I got to gather all the tools in my toolbox within the options market, deploy the correct one, depending upon the scenario that I'm trying to play out. And I think that's also part of what makes this market somewhat difficult for a lot of people is you get used to one tool working. And if you start applying that tool to everything, if I'm trying to put a screw into the wall and I start using a hammer, it's not going to work. I've got to
Yep.
use a screwdriver or power drill or whatever, right? So,
Yep. The
having the right
risk is you're
tool
going
for
to
the
do
job.
more damage if you're not using the
Yeah,
right tool. So,
exactly.
just good to point out that, these different strategies are the way to go. And then it's a matter of just being able to identify which stock is in which pattern,
Yeah,
is going to call for the right strategy. So,
right.
is there a key to that? Is there something that you look for to kind of determine, is this IONQ or is this one of this kind of flatliners that's just kind of hanging out?
Yeah, so a couple of the things that come to mind for me are generally speaking, when I'm dealing with stocks that have that huge growth potential, the stocks that people think could be revolutionary to the world. That's like an IONQ. It's Palantir from years ago. It's Tesla from, a decade ago. People looking for this to potentially change the world. That has that chance to do something parabolic like this, or something that people thought was going to go bankrupt and then has a chance to recover. When you're dealing with a big company, and Nvidia at this point is a mature company, and Apple and Amazon, usually we don't see something quite so parabolic. Usually we see something more of a grind higher. And so if I want to avoid some of this stuff where it's like a low probability of success, but a potential for a huge grand slam trade, I can certainly do that by just saying, all right, I want to filter down to names that are more known commodities or stocks. And stuff that shouldn't go into this kind of mode with the risk of absolutely shifting the other way. Because, part of the other problem with a stock like IONQ is, yeah, if I sold out, if I was long on the breakout and sold out on the top, I made huge returns. But if I didn't sell then, now when am I selling? And people can get really frustrated. It can have a huge weight on the mental capital, even though there's been a profit here on a run to 65, 64, 62. Is it still enough? And if I let it go, how long do I let it go? And all of a sudden, can I turn this big winner into a break even or even a loser? And that can be very taxing, I think, on a lot of traders when you're trying to determine the next move. So I like to avoid some of that stuff by going into some of these bigger names. And that's actually where, again, I go back to that forecast toolbox. So I pull up my forecast toolbox today, and the biggest thing I start with is, okay, what's the broad market indication right now? And it's expecting kind of the continuation of the chop. No surprise here. We've seen this pattern. So the expectation from AI is test the highs, then maybe a dip, probably not go quite as low as last time, and then a resumption of the rally. So a bunch of up and down. It actually times out right here with October 1st being the potential top, which is tomorrow. Friday being non-farm payrolls. We may actually see some risk off heading into non-farm payrolls if people are concerned. And then if there's a dip, probably a buyable dip. And if it's bullish, then maybe this starts shifting a couple days earlier. When I look at like tech, just as a comparison, tech is expected to be a little bit more bullish. People are kind of looking risk on here. When I look at small caps, which have had a nice run in general and some rotation into them, the expectation now is a little bit more stability. So maybe small caps stop taking that leadership. Tech may start taking some leadership. Net impact on the broad market is neutral. And here we are, we're just got a lot of noise. So I got to go through a filter and find out what stock works. And I looked at a bunch of different charts this
It's
morning to try to
great to
do
see
that.
you take this. We were just talking about how you got the whole market and the index represents the whole market, and there's a lot going on in between there. This was a great example. And again, you do this all the time. You gloss over this stuff like everybody gets it, but you're
Yeah.
smarter than the average
Sorry.
bear, man. So,
Yeah.
you're taking it and breaking it down into the sectors and seeing what the patterns in each sector are, seeing the
hmm
lift in tech, seeing, the S&P kind of just tapering a little bit and the small caps just being flat, then you start to say, all right, which am I looking at? And I pull up a stock in the tech sector, that chances are based on the sector, it's moving upward. So it starts to guide you to that strategy that's going to fit best for that option, for
Right.
that trade, for that ticker, right?
Exactly. And it's not necessarily all of them because I look at Nvidia and like our forecast is kind of choppy here, right? It's a little down, then a little up. Okay, so I can't just go out and buy anything in tech and expect it to work. Um,
Right.
But and then there's just other sectors that are working right now. So maybe it's not the small caps broadly. Maybe it's not even all tech broadly, because with that tech rally, there's still rotation within tech, and that can become that much more unmanageable. But I go through, my normal process here when I've got a situation like this, and I'm looking for something that I can allocate a little bit of capital, feel safe with, knowing that I've got non-farm payrolls on Friday. And it has an expectation of some bullish momentum based upon the money flow that's been going on, the pattern that's been showing up. And actually, one of the name that kind of gave the greatest interest to me was GM. Not a
Hmm.
stock that I normally look that excited about, honestly.
Ah,
GM, General Motors, it's not that
right.
exciting. But I started looking at it and I said, oh, wow, this has that really nice predicted trend in the next week or so, next 2 weeks. That gives me at least an indication that I feel pretty safe that this isn't going to go into liquidation mode, barring some new input that we don't know about yet. Some fundamental input, maybe they pre-announce earnings or something comes out that's not expected by the market. But we're looking at a stock that has a chance to get to 66 or maybe even a little bit higher in the next 2 weeks. And I like to focus on the next week. So, today, tomorrow, 3, 4, 5, 64, 65, maybe in the next week or so. And that's a nice return in a $61 stock.
Mhm.
Then I go back and I say, okay, well, this is part of it for me. I go to my due diligence and say, all right, what do I think about the chart itself? Okay, so we had a consolidation period with a blip from earnings that was quickly bought back up, but generally the range was pretty range bound, broke out, and ran for about 3 weeks. Well, now we just had a consolidation after that, broke out a couple of days ago. And if we repeat that pattern, there looks to be some more upside here. Consolidation, quick move, consolidation, a little bit slower move, consolidation, beginning of maybe a slower move. So I like the
Hmm.
way this is setting up with that stair-stepping higher, people starting to go into GM. It feels pretty safe. I'm not expecting parabolic IONQ stuff. I'm looking for something that can grind out 5% in the next week or two. But this
Hmm.
is a stock that is set up well to do that. We don't have as much risk of really structuring something off of crazy expectations. I can just trade it for the general momentum and the general flow. And this is a spot where I generally, in that scenario, say, okay, well, I'm going to play for a bullish side as opposed to a not going down. I'm not playing for the chance to go to $100 a share. I'm looking for 64, 65. And then that's where I just go out to the options market, staying somewhat short term here. And I look at an October 62-65 call spread where I buy the 62 call, sell the 65. Best case scenario, we go to 65. That's perfect. It's 80 cents right now. If we go to 65 and have max return on expiration, it's worth $3. I'm not expecting it to go to that point. I would not be holding it for 100% max value of the spread. And if we happen to go to 66, I probably shouldn't have sold the 65 call. If we happen to go to 67, I probably shouldn't have sold the 65 call. But at the same point, having that short call strike means that I've now capped my upside, and I am required now psychologically or whatever, I guess not fully required, but I have a real reason to close the trade because I'm not going to make any more money. If we go to
Hmm.
66, I'm not going to make any more money at this point. I need to close the trade, reevaluate, maybe put something new on. So I don't give myself that risk of a run up, creating a pullback because I never took my profit. I have to take my profit because I've hit too much percentage of my max value. So it's got nice leverage. Maybe it can go from 80 cents to 2.5. That's a good win. That's over 100% return if we just get the expected move here. And if we happen to have
Hmm.
something even greater, oh well, I still made over 100%. And if it's a little bit less, as long as we get to about 62.5 to 63, I still make some money on that scenario. And 62.5, 63, that could happen in, a day or two.
Yeah.
So it's not any crazy outlier expectation where I go out and buy the 70 calls and look for this stock to explode to
Yeah.
the upside. That doesn't get paid off unless we go parabolic.
Yeah.
So,
And we even said at the beginning, I mean, we know that the shutdown is something that's going on. The the general feeling based on the market's reaction is not going to have a factor. With the spread, you're setting yourself up, you're covering it, you're good in case things do get a little wild, right?
hmm
So you got some
yeah,
protection there. So it lets you grab some income because that's what we're here for every day. We got to pay the bills, we got to bring in a little bit of money, and but it keeps the downside capped in a time where there's some very tangible unknowns, they're not like
right,
it's not impossible that this could have an impact on the market, unlikely, but not impossible. So
right.
this looks
And
like a
it,
really smart trade.
And one of the things I like to think about when I'm doing a call vertical is what's the percentage of the total premium that I'm basically collecting back by selling it out of the money call. And what I mean by that is if I'm paying $1.20 for the 62 call, and then I'm selling this 65 call for 30, we'll say 36 cents, we'll go down to the bid. Um, I'm now collecting 30%, or I'm taking 30% of my initial premium off. So rather than paying $1.20, 30% of $1.20 is 36 cents. So I'm reducing my initial cash outlay by 30%. And in
Mhm.
that process, I'm actually helping, preserve a little bit of capital in case we go down. It's not because I'm going to go
Mhm.
out and buy more call spreads. It's saying I can actually deploy a little bit less capital to get a similar return in my scenario of playing for a move to 64 or 65. Not looking to now say, well, I'm getting it for 30% off, so I'm going to start buying 30% more of this. Instead of buying 10, I'm going to buy 13. No, it's just about deploying the capital at that point, reducing some of the capital expended, and still having a similar upside scenario for the play I'm making here.
Now, this looks really smart. Definitely, Keith. Great trade this spot for us. Appreciate you taking the time to share it with everybody. I know we're
Yeah.
getting close to the open here, so we'll wrap it up. We'll let everybody get back to their accounts and we'll log on to ours. And
Yeah.
we hope everybody gets a nice little payday today.
Yeah, absolutely. And hopefully, this government shutdown stuff doesn't create a big surprise that, I mean, the market's just not expecting, but we'll see,
Yeah.
right?
Yep. Everybody will be watching. I'm sure we'll know if
Absolutely.
anything happens with that. So, all right,
Yeah,
Keith. Well, thanks for being here, and we'll talk to you again soon. We'll be keeping an eye on this trade.
absolutely. Thanks again, John.